Hello guys, welcome back to Hezee FX Academy. And in today's lesson, I'm sure you might have established via the title, we're going to be talking about imbalance and how I use it to trade synthetic indices profitably. So if you're a returning subscriber, I love you guys so much. And if you are coming in for the first time, please consider subscribing and turn on the notification channel in order not to miss the tutorial that will be coming afterward, right? So how do I use imbalance? What is imbalance and all that? All right. So I actually have two ways in using imbalance in the market. And in today, I'm going to be talking about one of it, which is as an area of interest, right? I actually learned imbalance from a friend sometimes back in the year, I think that was 2019 to be precise. And he called my attention to it. And when I saw it, it resonates with my trading and I incorporate it. And I've used it successfully over the past few years. So in today, I'm going to show you step by step on how I use it. All right. So without wasting time, let's dive straight into the video. All right. Let's kickstart with the bullish imbalance. Now, use 3 candles to determine imbalance in the market. But what's the idea behind these imbalances in the market? Now we talk of the big players in the market, that's the hedge finders, the institutions, the banks, the commercial banks and all that. Once they launch an order in a particular place, there is this aggressive movement from that zone. And this aggressive movement from that zone led to what we call a gap in the price, right? And this gap in the price is what we describe, is what we call what? An imbalance in the market. In the previous, I taught on what the volume imbalance is and all that. So how do we determine imbalance in the market, right? You know, we have some refer to it as the fair value gap, some call it inefficiency, but I call it imbalance in the market. And we use 3 candles to determine imbalance in the market, right? 3 candles. Take, for example, we have the first one, we have the second one, and we have what? The third one, right? Now, once the price, the high of the first candle did not meet with the low of the third candle, that's when you call it what? As an imbalance in the market. Take, for example, we have the high of this candle and we have the low of this particular candle here, right? This gap you are seeing here is what is being referred to as, excuse me, this gap you are seeing here is what is being referred to as what? An imbalance in the market. And the idea is at some point, price return back to rebalance itself before what? Continue what? In the overall direction. This is a bullish what? Scenario. And you can see that from the top of this last candle here, that's this candle, price, what? The wick of this candle come to rebalance what? Price here before continuing. Now, look at the wick of this candle and the wick of this candle. There is a gap in between. That gap is what we refer to as what? An imbalance or a fair value gap or an inefficiency in what? In the price delivery or in the market. Now, coming to the bearish scenario, right? We have price. We have movement here. Look at this candle here. Sorry. Look at this candle here. This candle here. And possibly this candle here, right? Okay, if you check, the wick of this candle and the wick of this candle mitigate themselves. So it is called a balanced price action at this particular level. But if you look at this particular candle here and this particular candle here, there is a gap here. This gap is what we refer to as what? An imbalance in the market. Some call it a fair value gap or inefficiency. It's just a matter of what? Preference. This is what we refer to as what? Imbalance in the market. And at some point, price return back, to rebalance itself before continuing what? In the overall direction of what? The price. Okay? And before we go into the chart, there's one concept I want to call your attention to. We know that price creates a high and creates a low, right? So This low is called the impulsive move, and we expect what? The corrective move before what? The impulsive move. So it is this particular point that we want to see the imbalance, seeing the price, pulling back to before continuing the overall what? Direction. Right. Same way with the bullish case. We see what? Excuse me. We see the corrective, we see the impulsive movement, then we expect the corrective movement to fill up the imbalance before what? The impulsive movement. Okay, it is still that same basic concept of high highs, high lows, high highs, high lows in the market. So without wasting time, let's go into the chart to identify it. This is VIX 25 daily time frame, and let's see how it is being represented in the market. Okay, probably the subsequent video, I'm going to show you how to get involved trading this particular market. That is the entry aspect of it. But today, let's identify this price action in the market. Let's use this price action here, for example, okay? We know that the overall direction here is what? A downtrend. We know that this price action is literally pulling down. That is sure. We've established that, right? We know that this is where the price actually changed character from, right? So this is the impulsive movement, the corrective movement, and the what? The impulsive movement. Now, it is within this leg that we want to see that imbalance being what? Established or printed out. So if we look at this leg here, we can see that. Let me get rid of this so that we can actually do well with it, okay? So if you look at this candle here, right, and this candle here, I told you we use 3 candles to determine imbalance. There is a gap in between them. Look at the gap here and look at the gap here. Right? Now, this is where comes the concept. We know that this price creates a high, a lower low, a lower high, a lower low, and we're expecting what? A lower high before the lower low. Now, within this leg is where we want to find what? The imbalance. This is where the imbalance is. And we want to see the price pull back to what? This imbalance before what? The correct, and before the next impulsive what? Movement. Right? This is one of it. Excuse me. This is one of it. And you can see that as well. We have what? After filling the gap, we see another impulsive movement. We want to see a corrective movement before another what? Impulsive movement. We can look for within this leg, where is imbalance found, right? You can see that the whole of this one, there is nowhere imbalance. There's no visible imbalance here. The only imbalance we see was where? This candle, sorry, excuse me, this candle and what? This last candle here. So there's a bit of imbalance here. This was the only imbalance we had in the market, and price, you can see that price returned backward to refill the imbalance, before what? The next shooting down. Now, look at this after this impulsive movement. After this impulsive movement, there is another imbalance here. This candle, between this candle and this candle, is what? An imbalance. What do we want? At some point, we expect what? Price to return back to this imbalance before what? Continue the overall what? Movement. And you can see it actually, well, price return back here exactly at this point before what? Continue the overall movement. Not until we get to what? Please, there's so much on the chart. Let me get rid of it, right? Let me get rid of it. And for clarity, when the price was actually trending down, we see that there is a change of character exactly at what? This particular level here. From there, we begin to look for imbalance to the upside. This because what? The impulsive movement, the corrective movement, the impulsive movement, the corrective movement, and so on and so forth. Now, this leg of impulsive and corrective movement, we have areas of interest, and that is where imbalance lies. If you check this candle, well, shit. If you check this candle and this what? Last candle here, you can see that there is a gap in between them. That's from this candle and this candle. There is a gap. That is what the price has come what? To rebalance itself, right? Before continuing this overall movement here. Okay? Now, take note of this. All imbalance are not going to be filled 100%. But one good thing about it, 95% of the time, or more often than not, let me use that language, more often than not, price return back to rebalance itself before continuing in the overall movement. Likewise, if you check this candle here, right, and this this bearish candle here, there is a gap in between, right? There is a gap in between. That's this candle and this candle. There is a gap here. That's what price have come to rebalance. And as well, there's another gap here, right? You can see that price always come to rebalance itself before continuing the overall movement. See another gap here, right? See another gap here. Price return back, rebalance itself, right? Before continuing this overall movement. Now, you can see that within this impulsive leg, right? This impulsive leg, we have an imbalance. That is the current price action. The only place you can see balance is between this candle and this third candle here, right? This third candle here. And you can see that there is an imbalance between this candle and this candle. That is what the price have come to rebalance before continue this over direction. So from now henceforth, that is probably that if the price does not aggressively move and smash this take profit that is above here, price would definitely gravitate to sweep the liquidity that is above this one. Why? Because the order here has been fully filled. Okay, so we use 3 candles to determine imbalances in the market, and we use this as an area of interest. You can be on your chart. Once price return back to this particular zone, scale down to a lower time frame to look for confirmation before executing any trade. You don't just smash or place an order on the imbalance or in the imbalance zone. You wait for confirmation on the lower time frame. So in essence, we use 3 candles to determine imbalances in the market. And you can go back test it more often than not. Price come back, rebalance itself. Now, look at this aggressive movement here, right? This aggressive movement here. At some point, price will return back to rebalance all those imbalances left behind before continuing the overall direction. And you can see they are just everywhere, right? Whenever you see an impulsive movement, the corrective movement should take you back to the imbalance. If you check well, the whole of this movement, after this order, there was no single imbalance, right? The whole of this movement, you can see that the imbalance is left behind here. At some point, it's going to be filled. Look at here, imbalance between this candle and this candle. Between this candle and this candle, we have imbalance. Price return back, refill it, and continue the overall direction. Between this candle and this candle, you can see it's just everywhere. Price return back, refill it, and continue direction. You can go back test this. This same concept works on every time frame. Okay, let me go to the 4-hourly time frame. So that you can see it for yourself. It's everywhere, right? Everywhere, right? As long as the market is trending, price more often than not return back to rebalance itself before continuing in the overall direction. You can see that between this candle and this candle, there is an imbalance there, right? Price return back, rebalance it, and continue. Between between this candle and this candle, there was imbalance left behind. You can see price return back to rebalance it and continue. Now check the whole of this leg, right? We have another imbalance here. Price return back, boom, is everywhere. Is everywhere. So once you have a pretty trending market, pretty trending nicely market, you can as well use imbalances as an area of confluence to look for a trade setup on the lower time frame. Okay. So this is how I determined this is how to identify imbalances in the market. Okay. This is what I want to show you today. And thank you for staying to the end. I really appreciate for being committed. Drop your comment on what you think about this particular strategy and all that. All right. So till next time, peace out.